All right, perfect. I want to go over some of the basics, obviously. For the ES. All right. So I tried a video today. I actually was shorting off the open, but I was a little tired. I ended up actually getting in prematurely. I actually got in around here, but I was on the 1 minute. So like around here, I kind of got it chopped because I was not expecting. I knew we was gonna push, but I was expecting us to hit this level of liquidity. When we passed it, I had to look further out, which is where I found this green line, which is a level way out here. What do we connect to? Oh, like right here, some buy side. Oh yeah, yep. That music is actually my background. I'm at another coffee. I'm at a regular food store instead of instead of a coffee shop. But yeah, there was more external right here. So boom. But here we go. That was me waiting for the drop. Actually, I can drop. You're right. Off my screen. So this is actually kind of closer to the type of days. If y'all ever hear me say like mod or money on the dance floor, this was actually that type of day. I just didn't really expect it. But I look for days where we didn't, ran up for a while and we have just a lot of magnitude to take out, which we kind of did. And we ended up falling from high to close. 83 points, that's like $8 on the spot. All right, first thing, when y'all see any of these, the dollar.
Your return down a little bit?
You said what? What'd you say?
No, my fault. You're not. I didn't know I was unmuted. My fault.
Okay. Cool. My bad. All right. Yeah. So when y'all see this dollar, that's just doing it to show liquidity. Liquidity up top is buy side. Liquidity on the bottom is sell side. I just use this one because it's easier than titling. EQ just shows for equal highs or lows. We look for those because that's where liquidity is usually built. So when they come in and start filling gaps and they start making equal lows, they're building they're kind of building future liquidity for when they reverse it. Midnight open, that's just the open of the market before us, which would be London. I always like to mark that because I like to see how price reacts, around it. Sometimes we can bounce off of it, go through it. I mean, of course, price doesn't bounce or anything, but I know if there's traders like me who are trading it, they're going to be paying attention. If you ever see this, BTO, that stands for buy to open. Just means I took an entry on my chart somewhere. Usually what I'll do when y'all looking, if y'all see this, I'm trying to give you an idea. This is a short position. Doesn't mean necessarily I got in yet, but like this is what I'm looking for. And like this is what I'm looking to take out. And the red is usually my stop. And then what else? I think that's almost all of them. Try to think of anything else I use that y'all don't know. Oh yeah. And I want to go over what I chart off of. I saw a little confusion. I chart off of ES. It's the futures contract. Runs 23 hours a day, 6 days a week. I also chart off of SPX, which is the actual index we're trading. This is just another futures contract. This is This is the standard futures contract. This is a continuous. They're all the same shit. And then here's the SPY. So if you look, all of them have the exact same price movement. So you don't really got to worry too much. Even if the numbers are off, you should be able to just look to the left, or when you put in your order, look at the price of the SPY or SPX at the time and match that up. The candles are all the same. Also, if y'all see this chart, this is my divergence chart. Originally, it started, I had just a 2-pane chart like this, and it was made for ES and the VIX. Because for anybody who doesn't know, the VIX moves inverse of the SPY. It's kind of made to do that. Some people call it a fear and greed index too. I don't really know about that, in my opinion. I mean, I guess it's kind of true, but it's made to move inverse, and usually the higher, the higher it gets, the more volatility. Lately, it's been moving a little weird. It should be at like 40. There's been a few times where SPY was dropping and the VIX was dropping too, or SPY was pumping and the VIX was pumping, which is not supposed to happen. This is NQ. NQ is the NASDAQ or QQQ. The reason I have them both is because these two are correlated assets, so they're supposed to move the same. But there are times where you'll get little divergences. So like here, technically this time frame, this one wasn't bad, but let's say this low ended up low like that. That's a divergence, because these assets shouldn't do that. They should be moving the same at all times. So that's where you'll see me say like SMR or SMT. It's just showing like smart money reversal or smart money technique. Because whenever you see that, that's kind of like an early sign of a reversal coming. Because realistically, ES, S&P 500, and I think the NASDAQ 100, the top 50 or so stocks are almost identical. They're all tech stocks regardless. SPY has a little bit more of everything, but it's still the biggest stocks in the world right now, and have been are tech stocks. So that's why I chart them both and have them both like that. And then I'll watch the VIX, because I can kind of see sometimes when you can't tell, like right here, it looks bullish. I can look at the VIX and see if it has a really bearish setup. So that helps me a lot. So I think that's all the very basic questions. We can hop into like the Q&A right now if y'all want to. If y'all got any questions, you can either unmute and ask or put them in the chat.
How do you determine liquidity?
Liquidity, perfect, good question. So liquidity, if you don't know what it is, it's technically just another name for like money. Moneyness is where the money in the market is. Technically, I don't think we can determine it for sure. I mean, we could guess it, but I don't think we know because we don't see. But realistically, just think of it as where people are putting their stops. So kind of just like with the strat, how we got PMGs and we'd be like, or I mean not PMG, well, kind of PMGs or TTOs, we'd be like, they're stopped out. Same thing. So a traditional investor, who trades TA is gonna see, a high like this, right? They're gonna consider this resistance, which is perfect since I'm a stratter first, and this now I still don't really believe in a lot of retail concepts. So a traditional investor is gonna be like, hey, we reject it. I'm gonna put my stop loss here, and that shouldn't be two different types of stuff. People who want to stop when we break it and do buy orders. So they're buying the open, so they're going long. And there'll be people who might be, trying to short it, maybe got in like, here or something like that. And, they're actually using it as like, hey, this is my, my trigger to short. When we come and we peak over, that's what triggers the buy. And that's where it gives enough liquidity for larger orders to do a sell. And that's why they call it buy side. So the best way to look for it, you're just looking for pretty much equal highs or a level that's been tapped into a lot. There's also trend line liquidity.
And it could be from previous days. It don't got to be from the same day.
It depends. Like if it's previous days, but there's structure in front, it's probably not gonna be valid. But like here, this was a previous day, but there was nothing blocking it. But like, oops, like here, I don't really be looking at anything because it's already technically been ran through. And I know now, adding new stops. So I mean, a good idea too to realize it's just the market is gonna consistently do AMD or an aggressive move to consolidation. So like, you see here was aggressive move, then they kind of range traded.
Right.
It's a wider range actually, but boom. Aggressive move right here was small consolidation before boom, which makes sense because this is Wednesday. This is after close for us. This is Thursday. I'm saying after close, and they can build up, enough liquidity, and then fake people really out because like me, I was already in puts. So like up here, I'm not even gonna lie, I sold my put contracts for Friday, only to see it reverse and then get back in. But like even people like me, they were able to stop out because I was aiming for. I was looking at like this level of liquidity at the highest, and because on
resistance.
Sorry.
You was looking at that level for your resistance.
Yeah. Well, not necessarily resistance. I'm really looking at like potential liquidity that we could grab. But I had got in Wednesday towards the higher day, just off of like a strat setup and this BF. So we would come in here. Once I saw us grab this high and this high, you notice how they get reached into and aggressively. I was like, cool. We're probably not about to go past that, But in the after hours is when I saw, us not only purge, but then this is, during the this is London. I see us grab up here and we reject, which I thought we was cool until we opened, which I mean, technically I could have took this off open. I just wasn't, I don't know, I was a little sleepy when I woke up. So I don't like when my brain is foggy, but I expect us to hit this level of liquidity. When we passed by it, I was like, where are we going? So that's when I ended up drawing this, in which the video I was recording, you can kind of see it. But once I saw us, like I got in, like around here off the one, and I got stopped out. Once I got stopped out like once or twice, I was like, you know what? I just assumed we was gonna trigger and kind of trade sideways like this. So I literally stepped away only for me to come back, 30 minutes later or so and see this and end up having to get in late. But they do that. They do that sometimes. They'll purposely like go through a level of liquidity to take the next one because they know retail is really bad at looking to the left, and we're just gonna look at the most recent. So that was a good one. Not gonna lie, that one got me.
Also, can you show how to use like TTO with like whichever way I'm trading? Like what's the purpose? I don't understand like an entry or an exit or like how to use the TTO with my trades.
Yep. So TTO stands for triangle layout. It's just a pullback in the direction of the trend, realistically. So this one, the TTO is kind of harder to see, but let's see like right here. If you were someone who got in late in this uptrend, you'll be looking for a cleaner entry. Because realistically, you don't want to just, since you're late, you don't want to be buying straight green. So what you're waiting for is a pullback into the trend in the direction of the trend. So the more you trade them, like me, I'm not technically waiting for a strat combo or anything. It's more actually just structure. I'm seeing once I see a clean one, I'm just waiting to see if there's buying pressure. And if we're not violating this trend line, which once you trade long enough, like me, I can see a trend forming. I don't really be drawing the trend lines. I just see it like, okay, we're this uptrend. And you got to realize too, when we develop trend lines like that are really clean, actually, usually, well, one, this is caused by us, by retail, but usually smart money is watching and trying to take ads. That's why these will, like when these uptrends form, they're like usually really clean. I don't know if you notice that, like they're like very unchoppy. is because smart money can like watch that and they'll just take ads, off of lows. So they'll look for opportunities to add and stack their position. Then once it gets high enough, they'll dump it.
Or whatever trend we in. So if I was in because we're in the long right here, I won't want to get in it. You're basically saying while it's green,
Right.
don't be in. But when it come down and it make that triangle, that's TTO.
Like right here. You're buying this. It's cool, but then it pushes up and boom, it stops you out. So that's why you're trying to technically buy. Like,
that's a TTO.
Yeah.
And then I would buy the long right there.
Yeah.
All right. And that adds more value to my contract because I bought it when it was going red.
You add value to your contracts anytime the price increase. So like if you're buying, filling up here, your contract is worth less when it comes down here. So if you both took a buy, you bought here, break even, you got up 2% to go down, 5%, 10%, 20%, depending on your contract versus me. I filled right here and I'm almost instantly in profit. See that?
All right.
So that's another thing too. When I'm filling, I'm trying to, which sometimes can't give me because like today when I was on the one, but I'm trying to shrink my risk as much as possible. If you feel, let's say, spot like here, right? Typically your stop loss is up to here for these highs. And then whatever target, you be targeting is open, or is the midnight open of the day, or the lower day, right? All cool. But the better entry is to wait and see if there's a retracement, because when you enter up here, you just shrunk your risk. Because if it pulls back against you, you still technically bought higher than this person. This person's already dealing with drawdown. So I'm always trying to get like the top of the move. That way, like I don't worry too much about stops.
Should I use smaller time frames for that? Like, should I get off of the 5 and go down to the 3 and the 1?
I would recommend still using the 5 and then having like maybe a 3 or a 1 on the side. Like I use all 3.
Okay.
And mine I use. Actually, when I go home, I'm gonna upgrade it. I keep forgetting. I use the minute chart, but really I need to 15. So what I do, my minutes have a countdown, so I can see how many seconds are left in the 15. And I know four 15s make a 60, so a 1 minute candle. So as this candle is forming, I'm already thinking like what type of candle is forming on this 15. So like boom, we got 2 candles left. Now we're coming up to 1 candle left. There's 15 seconds. So I know this is a bunch of 2-ups, and then there's like a red 2 somewhere up here. And then now we're making the last candle. So this red 2, it might be a green and make a TTO, or it could be another red 2. So it's like 2 up, 2 down. Boom, it just went up. So it probably was like a red candle in the middle and then another green one. But if I had a 15-second chart, I could just see it all. That's why I'm gonna just upgrade.
All right. I think I got one more, then I'm done.
Yeah.
Damn, it just. Oh, when you making your high of the day, I saw you make a high of the day at like.
Yep.
At my time, I think it was probably your time. You like an hour behind me because I'm in Houston, I think. So it probably would be like 10 a.m. your time, 11
Yeah, I
mine.
think Texas 2 hours ahead of me, right?
2 hours.
I think so.
So if it was 11, it was like 9 your time. So at 9, you made a high of the day. You're not necessarily saying, you're basically saying like, all right, from when the day started, this is the high. I'm not saying it can't be a bigger
exactly.
high.
Yeah, I'm not.
This is the high. So
yeah, I'm not
back and it doesn't break that.
I keep adjusting it. So like in the video, my high day started here, and then we broke through, and I just moved it like that.
Right.
And once I saw the weakness, I knew. I mean, you can never know, but you're trying to increase probability. That's all trading is. I'm like, we took out liquidity. We already hit the top of the BF and made a higher high. Even though it's an older BF, we just made a new BF here, which why I don't really be drawing them as much because I can kind of see them. So we rejected off the BF like right there. Look, at this high, was still higher than these highs.
Right.
So that, that's the newer broad information we created, which once you really understand it, our broad informations are created only because of liquidity, which that's a brain.
When I draw broad information, I don't always gotta draw a bottom line, correct? If I see one at the top, then I could just draw that line straight across and it doesn't always need a bottom one.
Well, if you don't draw a bottom, it's more, I guess, a trend line. I would still draw a bottom so you can have like a guide of where it's going. But that's why with mine, you'll see me draw a tool, because before this is here, or actually, let me go to replay mode. It'll be easier. It'll make more sense.
Yeah, I was just gonna say, because what about when the candle's not right there? So it's like,
Oh. Oh, they updated replay mode. That's cool. I might do something like this, like, okay, boom, higher high. And they'd be like, all right, well, here's a lower low for now.
mhm.
Oops.
I get the picture though. I get what you're saying.
Yeah. That's how I'm gonna be. Yeah. Because no matter what, realistically, I'm gonna have, outside of the BF, I probably have either a strat target or liquidity to target. And since I'm a scalper and day trader, not a swinger, I'm not really gonna expect to realistically hold the first entry all the way to here. Now,
Mhm.
this was a day that it was good too, but a lot of days aren't like this. A lot of days will be, kind of like something like this, where you're holding all day, you get punished by theta, you'll get theta wash because it pulls against you. This day was actually good, where like people who bought here, like if I would have bought there and just held, I would have just been good. That would have been my best move of the day. But we can't always be perfect.
Yeah, I get you.
And then, yeah, this is below the week, which is what I expected. I mean, look at the higher time frames to see, because now the week, I think the week should be like a shooter now. Yeah, because Monday, Tuesday, Wednesday, Monday, Tuesday, almost a shooter.
And when you're using futures, can I look at your futures chart and be like, all right, my XPX chart should almost
Yeah.
look the same or identical?
Yeah, they should be identical. Oh, well, it can be only a little different because SPX closes, but for the most part, like SPX won't have certain things that happen overnight, but when it's the open hours, are gonna be about the same.
Right.
So see, like, boom. I think like on ES it's a lot lower because of the drop.
ES is how I can look at SPY, XPX really
Yeah.
overnight.
Yeah, ES is the futures contract. Yeah, like right now it's still moving. It's the Asia market.
Oh, that helped a lot.
Yeah, you ask me what you're saying.
No, I'm telling you, that helped a lot.
Oh, hell yeah. That's what I be telling people, because people will wake up and they'll be like, oh, it's a gap. I don't know what to do. And I'm not a trader. But for me, I've been watching all night, so I know exactly what happens. So like this, I was watching late at night and I dozed off a little. If we would have dropped here, I know I would have did the full position. That could have been a great trade. But like I said, it just caught me off guard that I didn't see this level, which from now on, I'm gonna start having extra levels, because there's a pattern. I can't really talk about it, but there's a pattern they purposely do to trick out smart money traders. And that's kind of what happened here on a higher time frame.
Right. Okay. On them
I got a
equal.
question. Oh,
Yeah.
yeah. What's up, Yarn?
What up?
So, yeah, like, sometimes like with SPY, right? It would like I realized like it would just chop. Like you'll think it's ready to pop or ready to make a move, and it'll just chop you out. Like, how do you know when a move is a move instead of just like,
Instead of chop.
Yeah.
On what time frame does that usually happen to you?
Well, since I started implementing like them smaller time frames and not like the traditional strat time frame, I've been way more successful. Like I'm not even gonna lie, like I've been doing good, but I just want to be a sniper like how you be.
Right.
Like, you know what I mean? So like sometimes I'm not gonna hold you, like I would jump into play, and like it'll be a decent entry, but then there'll be like a lot of chop before the big move.
You're too early.
Yeah.
I think that just comes with experience. Even me, there's times I'll jump in a little too early. What I do, like here, it was chopped. I technically wasn't losing much, but I just cut it. I was like, I don't like. I just think of it like risk reward. Like okay, which technically, the only thing I did wrong here, according to my trade plan, I took entry like literally right here. That's another thing. Since it's bearish, if we ever have a high, I'm always thinking any day that we have a high, right, off open, I'm looking to get, what the, shit, my bad. I thought I had froze. And let's say this is the open, right?
Mm-hmm.
I'm looking to short towards the top or anywhere above the open because I know we're in a bear market. So any high, the probability of it getting, ran through or reversed on it is very high unless we have a bullish day. So like we're at the bottom, of a trend. I expect a reversal on the day. Then I'm thinking at the lower day to try and get long because that's gonna be my safest entry, if that makes sense. And that's usually happen within the first, hour, unless we make a higher, or lower low. So that's just a side note. But yeah, like here, I got out, I saw this chop, I was just watching, being patient. Once we came back through this level, I was like, this probably I guess about to get short, which I knew was gonna happen. But when we came down, we sold down so aggressively, and I didn't want to chase right here for it to come back, which it did come back, but it just wasn't as clean. So it took me a second. I remember I ended up entering like somewhere over here. So I technically was trying to enter here, but actually that's what happened. I had stepped away, and when I came back, and I'm like, oh shit, it's happening now. That was like,
Yeah, that's a little TTO right there.
yeah, or well, the retracement into fair value gap too. Like that's the the setup, 50% setup, with the something like that.
Yeah.
That was like the setup, that I was technically looking for that happened. But the one way it can help you is like obviously not taking the very first few candles because it's never gonna be the first move. It's rarely gonna be the first move. That's one thing I think of. Two, I'll have my volume bars on. I'll kind of watch the volume. You can also use the volume profile and watch where the point of control is at the time and see if enough orders are accumulating there. But I think a lot of it just takes time, like just not time. Well, yeah, like chart time. Like you can just kind of see it, like where like, nah, that ain't it. But I also I tell myself, I'm in chop too long, like more than a few minutes, and it looks sideways and there's no structure I see, I just cut it. I'd rather wait and get back in. So that's why right here, I was gonna stay because I technically got in, somewhere around here, which is high day, which is really good. But I was in SPX and I'm like, man, this reversal against me, because I was already close to my stop loss of like 20%, and I never came into profit. I'm like, this reverses, it won't be worth it. It's gonna go straight to it's going to trigger my stop, which I don't even think I have my stop on yet because I'm waiting for me to get in profit. And yeah, I was gonna either stop myself out or just lose more. So I was like, I don't know if I want to take that 50-50 to make like this is a 50-50, right? But technically, this 50-50, in my opinion, wasn't worth it because it's like you get in here, but you have a risk of a lot of downside, only to have an entry slightly better than someone who took a safer entry here. You get what I'm saying? Like the risk reward kind of wasn't worth it.
Yeah, I get what you're saying.
Yeah, it's like I could just wait and miss out on, what was this? 37.46 to 37.40, like four is at 4 cents. I can miss out on that. 4 cents on the spot. So yeah. Who else got it? Yo.
What's up? It's Coca, bro.
What's up, bro?
What's going on, man? So on top of that, where you entered, right? And then you took your.
Wait, say it again. Yeah, back up for a quick second.
Yeah, so like that top where you entered and then you cut. Like, did
Right.
you? I think I caught that play.
Uh-huh.
I saw like a downtrend.
Right.
Right. It was like, wait a second, there's a line forming right there.
Yep. So yeah, like me, I technically didn't use his model. It's just was just kind of experience. Like I'm like, oh look, there's an imbalance candle, and then there's wicks right here.
Right.
A new level of liquidity, and we're in a bear market. Plus, I had a simple chart like this. I make this very simple chart to see level to level. Sometimes you just need clarity. So I'll have multiple charts. So this is just a simple one where like what I've been doing, I got this actually from a Forest YouTuber because the way he trades, he'd be like, he'll wait for price to come to a level.
Okay.
And he'll be like, okay, if we break this level, you know, I'm gonna go long. Or if we reject this level, I'm gonna go short. Or if he got long like here, he might take an ad. But he's like, if it rejects hard, he'll short against his position. So you're just showing how like you can kind of, you have a level like that, do multiple things.
Gotcha.
Yeah, I was like, oh, you know, at the same time, or was it open? It was here. Yep. Yeah, I just saw this level, and I'm like, oh, this is that same level. So once I looked to the left and I saw us run through it, chop, and it come down, I was like, cool. I thought we're probably about to reject, which now we're probably gonna do something like this, you know, boom tomorrow, something like this. I'm guessing.
Yeah, should be interesting.
Yeah, because even though it's just a level, it's still technically a broad information on a
100%.
So like,
And that's on a one that you look. That's a 1 minute chart right now.
This is a 15, but I just go through the time
Okay.
frames. Like I don't really make a big deal of the time frames, so they all kind of line up.
Yeah, of course.
So that's just people always ask me that, like, what time frame might be up. I'll be like, I don't know, because like my white one was originally made for the daily on the strat, but I'm so, especially with the hour, you can use the hour and technically come back a really long time and make like a daily broad information with just the hour chart.
Yeah, bro. Like I took entry today off of like the 30 minute. Which,
right. So yeah, that's why I don't really make too much big of a deal. It's kind of all the same shit to me.
Yep. That those XP or XPS, those were funky, bro. Those were funky.
Oh yeah, that's why I haven't played them, because the spread is all trash still. So I'm waiting for more people. Like I said, I'm like, I feel like Goldman and Sachs that paid somebody to start talking about it. Literally in one day I saw like 4 or 5 traders talking about it out of nowhere. Like what?
I just jumped in and I had a position in SPY earlier in the day. Like I was looking at the charts, I'm looking at TradingView, and I'm looking at pricing on my phone with Thinkorswim, and I'm like, wait a second, this shit is delayed by 15 minutes. So I was just watching SPY, and the pricing was somewhat in line.
TradingView though, do you pay for SIBO, right?
Yeah, bro, but it says it's not available right now.
Wait, what? Oh, so you're super.
Yeah, bro, check it out. There's a 15-minute delay.
Not for me.
Look, no, you seeing it right now?
Yeah, I'm live. If I was delayed, there'd be a D right here. So like some of the things I pay for or use are delayed. Like look, where is it? Like one of these I look at, I'm delayed, so I don't even use it. Or actually, but yeah, some of them I'm delayed on, so I don't.
But bro, like that's the crazy part.
Are you using the ES1? The continuous?
I was using the XSP.
SPX what?
XSP.
Oh, I don't know what that is. Oh, on TradingView.
Yeah.
Maybe that's why. Yeah, I've always said just chart on SPY. Maybe XSP is like in a different.
XSP it's delayed.
Yeah, see, yeah, it is delayed.
So I didn't know what was up with that. So I just jumped in. I was like, oh shit.
It's because the CBOE options, there's like certain groups of them. That's why. Like there's like an NQ, a NASDAQ, like a New York Stock Exchange. So I don't know, like so this one's new. I don't know technically who this one belongs in. So I don't have the subscription either.
Yeah, I'm gonna find out.
You know what? So XSP, the real-time data is not supported for it yet. So it's just that it's so new, I'm guessing. See that?
That's why I was asking you, bro. Like,
No, that's what I
on
was, yeah, that's what I was
on
like, I was like, just chart the SPY or something. Like, or yes, cause they're all the same. See, yeah, 15.
it was kind of it was the same, but it was like there was like a point difference. I was like,
Oh,
holy shit.
oh yeah, no, no, they all are because like the ES1, it used to be like a perfect 10 to the SPY, but as the quarters go on, they get slightly off because like the open interest. So I'm just always aware of that. Like it's not a perfect 10x to the, but there's times where that should be like a perfect 10x. But I like to use this one because this one's a year round, and then this is the quarterly. So this is ESZ. The one before expired was September was ESU. So we just transferred over.
Gotcha.
For
Okay,
ES,
that's good. That's good to know.
Yeah, futures contracts go in quarters. Even I didn't know that. Yeah, I had to watch a video and somebody was like, "Why are you using that one? It's expired." I'm like, "Huh?" But like I said, if you just use ES1, it's made to keep up with every quarter.
Okay. And they ran, bro. I got in at like 17 cents a contract. And they ran.
Yep,
They ran.
Yeah, that's a SPX contract technically.
I was like, it took profit at like 34. I was like, I'm good. I'm good. But it ran some more.
Yeah,
so that's an interesting play because they're cheap as shit. Here.
Right. I was like, I hope he's able to get out.
I appreciate you sharing, bro.
Yeah,
as always.
All right, cool. Next.
Only candidate within the first day. Try ZipRecruiter for free at ZipRecruiter.com/free. That's ZipRecruiter.com.
Who next? Who got the questions?
Hey, what's good, Yarn?
What's good?
Hey, so you use the indicator, the fair volume gap. You actually use it, or how
What
you
about
use
it?
it? You wait for the bounce from the indicator?
Yeah, a lot of times I don't even have it on anymore. But when I do, yeah, you could like I can see them a lot. But yeah, like right here, this is one. But sometimes it won't make them. Like right here, it made it, but it didn't retrace. See that?
Yeah.
Came up to here, it didn't even pull into it heavy though. That's the only thing. Sometimes that frustrates me. Like I'll miss a move. I'm waiting for retracement. I don't know if anybody else had that. Like here, it technically didn't. After this, it never retraced again. So people were probably waiting to retrace it to one of these, and it never did. So they missed out on a bunch of points. I don't know if that happens to anybody else. That happens to me a lot. I like $2 or something.
Can you go to that indicator on the indicator thing and show me exactly what it is?
Yeah. FBG and FUSAM. There's two of them. They're both by.
Is it more accurate than not accurate, or what?
Yeah, it's accurate. I mean, because all it's showing is just whatever script he's using, it can measure the gap in between the candle. That's all the FBG really is.
Right, but it's showing me that it's one right there. So it's a retracement. Either way it goes, it's showing me all right.
Yeah. Yeah, so like this was like a 3-minute one that we traced into later, and then boom.
Are you looking to the left to see if there's any green fair value gaps that need to be filled as well? That kind of throws me off a little bit sometimes, bro.
Yeah,
honestly.
Sometimes you'll get stuck in between two.
Yeah.
Yeah, I do. Or like if I make a green one, but like which that's what he talks about, like where the balanced price ranges. I forgot where we were, but we had a green one, which it was like intraday. It was like on a smaller time frame. But we made a green one, and then we came down and we made a red one and came right through it. So that told me like, all right, cool. That one just completely got invalidated or mitigated,
right,
balanced out. So the market unbalanced and rebalanced instantly. So I'm still following my buy because like the main thing is just remember, like once we grab liquidity, the algo or whatever you want to call it, now it has triggered and now it's going to reverse and attack. So once we grab buy side, it's now going to attack sell side.
What do you do? What are you doing when you see? Okay, let's say if you're looking at one of those fair value gaps, let's say towards the top, right?
Right. Hold on, real quick. Hold on. I'm going to turn my value if I can barely hear.
Sure.
All right, try talking up.
So
There we go.
the FEGs, like the red FEGs that we're seeing there, you'll see sometimes like whatever it is, whatever index, it's bouncing back and forth, right? It's a little bit of chop. They'll pop up. It'll be red, then it'll clear, right? Then the red will come back, red box will come back, and then it'll clear because it's filling the gap. At
Right.
what point are you like, nah, this is a go? I mean,
Me, like that's why I don't really care for the box that much anymore.
yeah, I was gonna, okay.
It throws me off sometimes.
Right.
I mean, it doesn't really throw me off, but like I don't like that red bit in my face, especially if I'm on like there's a bigger one. So like I'm just like boom. Sometimes I'll do this, where I can kind of just look to the left and see it.
Gotcha.
And I know that we're gonna come into it a few times. I'm just trying to measure, with the the OTE, to see we hit one of those levels, which we hit the 0.62.
Mathematics right here, bro.
Right. Yeah. But I know some people who don't take entry unless it hits 7.79, the deep discount.
Really?
Yeah, I was talking to some smart money traders. They were like, they'll do that because the risk reward, is much greater, and they were like, what if you miss? And they were like, then I miss, wait for the next one. That's another thing because I've noticed you gotta, especially if you want a win rate to be high, and I've been working on it, you have to be patient. So that's why like here, I didn't take much more because I wasn't sure and I just didn't want to just force a trade and didn't see my setup, which I saw here. But like I said, I wasn't paying attention. I think that's why I closed my laptop and I was like, man, I'm done. I'm gonna go to sleep. And then I had my tablet up and I looked at me, oh shit. Because like I said, I just assumed that we was gonna trade sideways for the rest of the day. And I was like, it's not worth it for me to trade a sideways day. And I'm already tired. I really thought we was gonna do something like this for the rest of the day.
That's what I was looking forward to today as well, bro.
Yeah, but I thought it was gonna be like a really tight range where I couldn't get trades in, and if I'm already tired, like I'm not gonna sit there and just frustrate myself because it's like
it took like 369 puts, and it was just trading sideways, and
I just
like, wait a second.
I just know on days where it's like super sideways. Like yesterday was sideways, but I was able to get a few good moves. But like on days where it's too sideways and I can't, it's like I can sometimes make money, or I'll sometimes break even. I take a bunch of losing trades or break even because my risk management is good. So it's like it's not worth it. Like that's just a mental exhaustion. Or even if I make money, it's like so little compared to a normal day where it's like, was that really worth the effort? But I can just get and wait for this move. Like if I had to play this move correctly, this would have done more than triple what I did yesterday. It was like type of move I wait for.
100%. I had some SPY puts, bro, like 369.
Yep.
And they moved from like $1.52 or $1.48, and they moved up like to $2 something. I sold them at $2, bro. When I looked on that pullback, that's right in front of you, bro. They were like at $5, and you should have been more patient. Like I didn't wait for the perfect entry, bro.
Yeah.
Patience is so. It's so important, bro.
Yep. Yeah. The way I'm using the fibs, I'm just drawing it on the created swing high and swing low from like top to bottom, and then I use the body instead of the wick, like how he talks about. It's like there's the body, it's a body. And your sweet spot is between the golden zone and the 0.79, but sometimes it will only trace up to the 0.50. But yeah, so if you think about it, that's giving you the discount portion of the newer range. So now you're shorting the premium back into discount.
And why didn't you draw the fib off the top of the line, off the top of the BF? I'm curious.
ICT doesn't consider wicks to be like real. Well, like they're real, but like for him, he considers this, which makes sense. Like even though this is a 2-up, to him, he'll consider it like a 1 because the body never really broke.
Gotcha.
Which makes sense because these wicks realistically were just the manipulation of the move when you think about it. That was the aggressive buy and aggressive sell, AMD. That's how candles form. They accumulate. Every candle opens, like a line, technically. And then as it's fluctuating, it makes, that aggressive move up or down. That's gonna form the first wick. And then it expands in the direction of the candle. So, it's like a red candle here. And as it's forming, like we know what it looks like when a candle's, first forming. So it's doing like this. So then like, let's say it's gonna be a green candle to go. So just doing that, because price was there, right? Think about it, that just made the wick for that candle.
Right. It's like painting. Like he refers to it as painting, right?
Yep. So now that was accumulation manipulation, and now we're gonna distribute up or expand up, range expansion on a different.
Gotcha.
So I'm always thinking about that, like especially on hours. I'm always thinking when a new hour opens, like I just gotta catch the move in the wick and then catch the direction. And then I can play like a strat directional.
Got it.
Yeah.
Okay.
And then I'm doing the model. I'm just doing his standard 2022. So the break a structure, creates a fair value gap, and then a retracement into that fair value gap. That's all I'm doing. I haven't done any of the advanced ones, but yeah, doing it long or short.
Mm-hmm.
Oh no, I was talking. It was somebody had a question. Yeah, and yeah, only if we run liquidity. Usually, I'm waiting like for. I mean, a lot of times I'm using a higher time frame liquidity, but even on a shorter time frame, yeah, I'm kind of like waiting to see if we manipulate and make that move. So it's all in the wicks. Which contracts you recommend getting on Tuesdays, Thursdays? It's gonna depend on what time a day. So I think I put in there. Remember, that's like the main plan. It was like 10:30 or 11:30 was when I saw them. Let me see. I took a screenshot of them. So yesterday 11:30 at the money strikes 56 delta was one out the money. That was 56 and the delta was 37. And then one more out the money. So we were at, SPY was 367.65. The one that's at, currently almost in the money or at the money is 367. The one that's, to me, I would consider more out the money would be 366. Those were like some of the best ones to get because they were 31 cents with a delta of 22. And then the next one that was 2 strikes at the money was a 17 with 13 delta. So either of those, if you think about it, you just get a $1 move on the spot, you're already almost at 100%. So, and that's kind of how the plan is made. You just need a small move after, 10:30, 11:30 PST. So for y'all, that's like 1:30, 2:30. But yeah, lower the day, the cheaper the contracts get, which makes sense because it's so much riskier because you only have 2 hours, 3 hours left to get in the money. But for us, because the algorithm for the contract it just calculates the probability of the money. It doesn't really calculate based off of like structure and pattern and setup. It just says like, hey, we're this far away with 2 hours. The probability of us getting that money is, X or Y now. But for us, as we can understand technical analysis, we can see, a really better setup for it or bullish. That's why people made so much after that gap down that day. These contracts, think about it, like we were at 3,600. Down here, I guarantee these 3,600 contracts were probably like 10 cents or less. So like $10. And then here, now they're back in the money. So think about it. Your gamble of $10 and turn it to like $3,500 because it was so unlikely. Another thing I'll recommend outside of the mentor, outside of just ICT, have your own personal. Like I have my own personal setups outside of the strat, or that I can just have setups in my head that I kind of look for. So like one of them I had got from kind of like Common. It was like in a strong uptrend. They call it like the first red. So I would just look for like the first red day and look towards the bottom of the day to try and trade a reversal. So, and then like I guess my setup now would be after a very high day of open, my setup is kind of just looking to short after I see a liquidity grab and an aggressive move down, and it usually inside. So that's what the model is. It's just waiting for consolidation and to see a high, a high week usually, or high day, like 2 days in a row, and shorting that because those days are always going to be like an aggressive sell-off. But if you look at my chart, I have tons of them. Like there's another one. This one I remember catching. Just watch it for consolidation.
As a scalper,
Boom. That shit was a clean one. I remember this. All right, what were you saying, bro?
I was gonna say, as a scalper, how do you be knowing, like, how do you determine like when you gonna hold for one of the days when I see you like have your 1,000% or plus days?
On my entry, a lot of times. Like here, if I would have got this entry and held through, there's almost very there's like no possibility I probably would have sold because I was watching the 30, 15 and 30 in the hour other charts, and it was just two down, two down, two down, two down. So there was no real actionable signal to get out after a certain point. But it helps that you buy multiple contracts because you can just take partials. So like boom, 100%, sell a portion, 200% sell a portion. But me, a lot of times too, like yesterday, off the short, I was already up, and they were SPXs 100%. So like I just set my stop loss to 100%, and I sold half my contracts. So then I think we got up to like it was like 350, 400%. And then I moved my stop loss to where it was like trailing like 50 points. And I got stopped out, but I still, sold for like 300%.
All right.
But it's because sometimes like when you do that, they call them like ghost candles. It's a candle you can't see that they're using to stop you up. It's crazy the price is sold for, and my stop, like I never, unless it did it for a microsecond, it never take me touch that price. But I'm used to that now. So that's why I will have, multiple positions. That way I'm locking in profit the whole way.
Okay.
Yeah, hell yeah, it will. S&P be moving slow sometimes and then fast.
How do you determine your take profit levels?
How do I what?
Determine your take profit levels.
I take profit based off like the percentage.
Oh, okay. So you don't go off levels of the actual stock?
Say that part again.
You don't go off the levels like of the actual stock, like support and resistance?
So it depends. No, I don't really use support and resistance anyways, because I'm just using liquidity targets. But it depends. Like if I'm on SPY, I'm a lot more likely to be able to hold longer because I know even with the pullbacks, I won't get killed. But with SPX, it's just harder because I'm like, unless I know, like there's days I could, like today was a day that I could have, but I just didn't expect this day. But on days like this, I'll probably hold. But on days that I expected to sell off and then come back like this, boom, and then something like this, I'm just not trying to hold because theta is gonna make my contract, even though we still came down, my contract value is gonna go like this. What's up? And it's way, my contract is worth way less than the price because theta cooks it so much. Like every move against you with theta, you lose a portion of your contract that you could like never get back. Does that make sense? Theta is just every second of the day. So if I think I'm gonna have a strong pullback on SPX, it's not working. If it's SPY, theta's not as strong, especially if I'm getting like right at the money, or if I'm in the money too. That's another one. Let's say I get in, I'm like super in the money, then I don't really care because it's like even though the theta, which is extrinsic value, is getting washed, I have intrinsic value.
Does it help
to it.
with SPX to not have the same expiration date, like theta not eat up as much if you don't got the same day expiration?
Say it again. Oh yeah,
Does
yeah.
Theta not eat it up as
Oh yeah,
much?
yeah. Further out, yeah, you won't get eaten up. So like the account I'm about to start trading next week for the firm. That's what they told me. They were like, "Can you? We prefer you do next week," which is cool to me. Kind of that's easier because on a pullback, I won't get destroyed. Theta will destroy you on pullback sometimes. Because like me with SPX, what I'll do is I'll enter off a minute when I have my stop, and then the moment we go to break even, I'll set like my 20% stop. When it first enters like negative or sometimes positive. As soon as we get positive or even break even, I'll put it to a 20% stop. That way I'm not getting stopped out instantly. But like I took an entry where like I got to 0 and I went to my broker to set it. And I'm like, why is my stop not setting? And I looked at the chart again and I should have reversed. So I had to sell it and I instantly lost like 25%. That's the only annoying part about SPX sometimes. Like at certain levels, they can be really risky.
That's it for me though. Thank you. Today really helped a lot. Thank you.
I'm glad. Yeah. So right now we took out the low of the week. The week should look like. I'm always doing that too. Always trying to forecast what the week is going to look like. So now week is 2 up, but it's still failing. So we knock out, anything below this and come back to the open. We now have a shooter week. So that'd be a 2 up, 2 down week, which is probable because we made a smaller BF. And think about it, it's all fractal. If this was an hour and even 15 minutes, you just be like, oh, this is a TTO down. Even though we're on a week, it's all the same shit. The market is fractal. Same patterns repeat themselves on all time frames. Also, the quarterly flip is right there. So that's what I was counting on. I'm trying to count on the quarter to flip and aggressively. A shooter, is actionable, and we have a failed 2 up. So that's kind of how I trade. I think of like 3 or 4 strat confluences on the macro with the BF. And yeah. And you see all right here, we just reached into this liquidity on a much higher time frame. And this was, what is this? A weekly, imbalance. Think about it. And price just constantly reached into it.
So that liquidity is basically like the new, like kind of like a resistance. Like if it hit that in the upcoming days, I can look at that for price to
just think of it like
short area.
The market, all markets move off liquidity. Like I tell people, think about it if you were, because it makes more sense on the spot because we know everybody's trading it, right? Like the hedge funds and all that. So they have to have big funds. But regardless, if it was like some bullshit stock that nobody heard of, like XXP, if you were someone who had, tens of thousands of shorts, your order just wouldn't fill until you had enough buyers ready. So regardless, no matter what market it is, they move with liquidity. If there's no liquidity, the markets would be very flat. So yeah. Also, what helps you too every day when you start, especially if there's gaps, just think about like what the person before, from the day before on the last close, think about what the longs and shorts are doing and where they're at, if any of them are trapped. I'm always thinking about that, like, damn, did somebody get trapped? Like me, I was short and I ended up, technically getting trapped. Even though I had a feeling we were going to, realistically, I knew we were going to reverse because we're coming to the BF, but I didn't want to take the risk in SPS contracts because the beta was so much higher. If I was in spots, I wouldn't have cared. But we kind of just did exactly what I predicted. We just went a little higher. I was expecting us to really do this. That's what I was expecting. But now I'm expecting us tomorrow, we'll probably do the same thing. We always have a little hop and a drop. Or we could do this. But more than likely, the higher probability, I think, is take out this and continue knocking out this low of the week. Yeah, right there. And there's a gap. We take this low and approach this gap. We're probably gonna fly through it. Monday, Tuesday, Wednesday, Thursday.
On strat, that would be our next target, that green, the bottom of that green.
Yep. Yeah, what is this? 2 down, 2 up, entry. Yeah, next pivot.
You pre-draw your lines, you just be like, and you be predicting exactly how it gonna go. It's just like practice, or you just be like predicting. It just
Say it again.
when you pre-draw the lines of how you think the market gonna move, that just come
Oh,
from
like
good
the little curly lines, the little triangle
yeah,
lines.
like you'll send us
Yellow
a
one.
without the stop, without the the candles right there, and then later on the candles will fill your lines exactly how you drew it. Like
You talking about this one?
Yeah, like that.
Yeah, that's just from chart time. I've seen so many patterns. You just kind of get used to like, all right, because you know the price can't just go straight down. So like on the daily, we're coming down. Continuity wise, we have what is it? Week, month, quarter. But we have that's only because the quarter like is recently. We're so close to flipping continuity back to full red. So I know there's just buyers in here who are fighting continuity. So I expect us to have pushes up on the way down. But it's kind of rare when you'll see like just 8 reds in a row. There's almost always going to be like some type of pullback because people who get in short here, especially if we complete this, like if tomorrow we go red, you got to think about it. People who got the higher week on Tuesday, which a lot of strat traders and ICT traders are looking for the higher week, or institutions who are smarter than us, they're probably going to close, especially because a lot of like people and institutions like to close out their positions Friday and not hold them over the weekend for shorter term. So because they're going to be closing out their positions, all these shorts, you have to technically buy up to close. That could probably cause a pop. And it's like, think about it, everybody who got in short pretty much is selling. Sell, sell, sell. So people who are bullish are going to see that and look for, especially with the gap fill, people who are bullish are going to see that as like discount and try and scalp the upside momentum on Monday. So I'm always thinking of that like a few days ahead, like, okay, Friday bearish, Monday could be long. So if I want to swing some longs, I can try and get the lowest low, and there should be some type of pop. It's just probability.
All right, I'm going, Yarn. Good looking, man. See you tomorrow.
Yup. All right, y'all. Any more questions?
Appreciate you, Yerm. Thank you, brother. I appreciate you, really.
No problem. I'm about to get back to the crib. Upload.
Thank you, y'all.
You're welcome. Yeah, some uploads.
Thanks, chat.
Yeah, I'm gonna upload this in the mentorship and then I'm put it in Woolly Boys and probably Strat Code too. That's gonna be a private video. I'm not gonna make it public. So yeah. Yep. Tonight, I'll be posting the charts like I always do. Yeah. Let me add my YouTube disclaimer. There's been a video from Faith in the Strat, co-owner of Oily Boys, admin and Hungries. Y'all need any coaching, reach out to me. If you're looking to join the SPX mentorship, send a DM. It's limited, but we're taking positions. And yeah. All right, you guys. Peace.
Yes, sir. See you later.